Welcome back to Trading 360. I'm Caroline Woods. It's time for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. And here to take us through the trades is Mike Shorr, Director of Trading Education at Prosper Trading Academy. Ben, Mike, so good to have you both here with us. Mike, let's start with you, and let's start big picture before we get into your actual trades. I'm curious about your thoughts on this market. Seeing some green arrows after last week's sell-off, but they don't have a whole lot of conviction. What's your take?
Yeah, it's along those lines. So I think we're waiting to get into kind of the teeth of earnings. We've seen some earnings from the banks, but we're going to want to see some of the things that have driven this market up in order to convince this market that we're actually going to that next leg. And we have a lot of stuff out there with inflation, with what's happened over in the Middle East over the weekend and everything like that. And so things are still kind of strong, but I am kind of in a fade and see type of movement. I think that just buying highs and highs and highs, I think is a little bit dangerous here.
Okay. Let's talk about your first trade. Broadcom lower today, but actually up about 21% year to date. Tell me about this one.
Yeah, so along those lines, so we have a stock that has had a really nice run there. We've seen some weakness in the chips, and with your NVIDIA, AMD, and so forth, and so we're seeing this consolidation area. I'm really just playing this that we don't go and make appreciable new highs. So I'm kind of the way that I'm going to play this is with a credit call spread towards the top of that consolidation area. So selling that 380, 390 call spread, and just not convinced of that next move up until proven otherwise. But right now, it's certainly not looking that way. And today's price action is kind of following through with that.
Okay. Yeah, speaking of today's price action, up about 0.3% right now.
Yeah.
Ben, curious about what you're looking at on the chart for Broadcom.
Yeah, Caroline, still in a trend higher here as far as I'm seeing, and we have some key levels to keep an eye on should we take them out. But at this point, the bulls remain in charge. Let's just begin, first and foremost, the 4-hour candle chart here, and you're looking at price activity going all the way back to when stock was trading down around 760, and that is back in September of last year. You could see a very well-defined trend to the upside, and I also went ahead and identified some of the areas where we kind of paused and consolidated. You can see we're currently balancing right around this 1300, we'll call it 1320 level. And I know it's quite a ways to the downside, but you've got some key areas. For one, you've got some lows around 1200, and then for me, the line in the sand is really 1100. Again, quite a bit below, but when you see advances to the extent that we've had in the broader market or in just individual names like this, that's basically what happens. So again, 1100, as long as we can hold above that level right now, still very much the bulls remain in charge. Let's take a step back, add a little bit of time on. I've got a daily candle chart here, so now we're going back to, we're talking the spring of 2018, and a very similar pattern where migration of value has been and continues to be the upside. Now, last time we looked at Broadcom, last time we looked at shares of AVGO, we recognized this high conviction breakout, right? This vertical move as we moved away from this balance area that had been forming around 840. We talked about what we wanted to see at this point: high conviction, vertical, high volume, good participation and energy associated with the trade, and we got that. And then actually what's happened is you can see that we've kind of gone into a bit more of a sideways kind of horizontal type pattern. So let me show you what I went ahead and just established. I think that we can determine that we're forming a new area of balance and have formed new areas of balance at higher levels. So again, that 1100 kind of pause, 1320 right now, the key area. I've got the 50, the 200-day moving average. You can see how we're still holding above those levels. So the 50 very closely, but the 200 well below us at 1031. So again, really no indication from our side that we've given way at this point. It still looks to me like from the price activity that the bulls remain in charge again here, Caroline.
Yeah, analysts on Wall Street largely positive on this one as well. Median price target 1550. Mike, want to give you a chance to just give a final word on Broadcom before we move on.
Yeah, I don't disagree. I'm just not convinced of that next leg up, and so I'm going to play it passively with a credit call spread.
Okay. All right, let's move on to your next trade. Dick's Sporting Goods moving into retail. It's lower today, down about 1.1%, despite that upbeat retail sales report. Has taken a big beating this month, down about 11%, but a winner in 2024. Tell us about this one.
Sure. Yeah, so nice run up in Dick's Sporting Goods. But what it has done is it's lost that consolidation area from that gap up from last earnings. And so it's a bearish play, just purely on technicals. See if we can fill that that post earnings gap and profit from that. In general, I do like the stock, but remember, this is a trade. This is not a buy and hold or sell and hold forever.
Okay, we'll get to your trade in just a second. But first, Ben, talk to us about this lost consolidation area in the chart.
Yeah, I don't know if I would say that we've lost it yet. We're definitely testing the lower extreme or extending the lower extreme of it, that's for sure. We did see a high conviction move. If you remember, it was just a few weeks ago, and it got the stock, well, you can see all the way up to 225. This rally, if you remember, started back in October, down around 101. And then again, just kind of looking at these areas of consolidation, I went ahead with just sort of a fat crayon here. 110, 140, high conviction move to the upside, and then just sort of establishing possibly something we could determine around 215. We'll call it 210, 220-ish, but we've got definitely a well-defined upper extreme around 225. And yeah, it does look like we're kind of working our way back into that high conviction, those couple candles that we saw to the upside here, 4-hour candle charts here. So that big move up here we saw in reaction to earnings last month, but you can also see that we've kind of lost some of that momentum to the downside. So let's see if the broader market can recover. Maybe this is just a reflection of what we're seeing there with some of the apprehensiveness over the last couple days or last week. But taking a look here, a step back at a weekly candle chart, you're going to see, again, some broader areas of consolidation breaking out of this 113 area. So you can really see the high conviction associated with this. Sustainability is difficult, right? When you see a big move up like this, we're basically looking at about 10 weeks, 11 weeks of upside momentum. So it wouldn't surprise me to see a little bit more, again, momentum taper off a bit here and just kind of find a little bit of a consolidation at this upper level. Now, that'd be very healthy for the bulls, right? Because, again, sustainability comes into question. You want to see this thing establish a new area of value at a higher level after a high conviction breakout out of this 113 level. What you don't want to see is a V-top and kind of work your way back into that range that was established here. But taking a look at where we are relative to the 50, the 200-day moving average, you can see shares at DKS holding about both of these. RSI is rolling over here a bit. I'll give you that. We're starting to establish some new lower levels here. We're back into the gap. This is what Mike was talking about. But again, to me, it just kind of looks like range extension here and just possibly establishing a new low around this 200 level. Something to keep an eye on this week, that's for sure.
Yep.
All right, yeah, currently trading at 295. So, Mike, tell us about your actual trade for Dick's Sporting Goods, given your skepticism right now.
Yeah, so this is going out to next week, so April 26th, 192.5, 197.5 put spread. You can buy, and so that'll take care of filling that post-earnings gap, or just about as close as you can get with the strikes that are listed. So you should be able to buy that for about $1.30, $1.25. So you're looking at a reward to risk there of about 2.85 to 1 if you buy it at 130.
Okay. All right, let's talk about your final trade. Another big. Oh, go ahead.
No, I was just not gonna say, in general, I do like the stock, but I'm a trader, not an investor. And so I'm looking at things a week and a half and not on a really long time scope here.
Okay, thanks for that reminder. Let's talk about your third and final trade. That's Palantir, also down about 1% today, but up big year to date, up about 30%. Are you skeptical in the short term on this one as well, given the run up?
No, actually, this was one that I threw in for the geopolitical stuff that people might be looking for a defensive stock. And, usually when you think defensive stock, you think oil, gold, treasuries, or things like that, flight to quality, or something like a Raytheon or one of the big defense contractors. So this one is one that it doesn't look great on the chart, but what it does do a lot of things fundamentally that should do well if things get crazy in the geopolitical world. AI and a lot of government contracts and a relatively low valuation. We're at the bottom of this kind of consolidation, the Donchian channel, we call it. And so it has room to run to the upside.
All right, so Ben, Mike's not too bullish on the technicals, but definitely more bullish on the fundamentals here. But walk us through the technicals in terms of what you're seeing in the chart for Palantir.
Yeah, I like favoring the longs here as well. I mean, this is another example, as Mike just mentioned, testing the lower extreme of range that we've been in. If this a lower extreme retest fails, and ultimately you'll be looking for some momentum in the direction of the trend that we have seen in the longer term, which has also been to the upside. So let's just break it down, starting out with a 4-hour candle chart and just looking at the two phases of development, really identifying them, because Mike brought up a good point a minute ago in terms of time frames, right? Depending on which time frame you're looking at, even in this sideways consolidation, there's opportunity for both the bulls and the bears as you see that random type phase of price development transition into the high conviction vertical phase, and then you get that new area of value that's formed at a higher level, recently topping out around 2750. That was back in March, and you can see for the most part we are sideways. Now, Mike mentioned again that we're kind of testing the lower extreme of the range that we've been forming. I want to just show you that I've got two areas of consolidation. They're easily identifiable here, established for us to look at. Again, we're talking about a 4-hour candle chart, but take a look. 17 and 24, but as I look at this, and I just want to show you how even within this pattern, you can see it playing out multiple times again. So this is a very high frequency pattern that plays out. Right now, communicating bullishness here as values moving higher. So let's take a step back, move away from a 4-hour candle chart and add a little time on. Daily candles now going all the way back to when the stock was trading around $6 back in 2023, balanced around $7.50. You can see again that vertical phase come into play, sideways consolidation around 17, wash, rinse, repeat, currently bouncing around 25. Again, testing the lower extreme of that range. Hey, take out 25, you open up a door for a retest of those recent highs of around 27, 28. This is a high conviction bull trend that we're seeing to the upside here, and acceptance of this upper level as of right now is what's being established. The one thing that has me a little concerned about here is just the sideways consolidation here has us now dipping a bit down below this 50-day moving average. RSI has been rolling over a bit. We've been seeing a series of lower highs. But yeah, in this one, again, it does look to me like the longer-term bulls are being rewarded. Test of a lower extreme right now they hope, I should say, will hold.
All right, so Mike, not necessarily benefiting from the geopolitical turmoil from over the weekend with Iran and Israel. Shares down about 1.1% right now, but walk us through the trade for this one.
So I'm looking at just, again, next week, so April 26th, 23-24 half call spread. I mean, this is a cheap play. That's another reason why I put it together, that, you know, a lot of these defensive stocks are in the multiple hundreds of dollars, that you have a lower nominal value to this stuff. So $1.50 wide call spread, you should be able to buy that for about 25 to 30 cents. So you're looking at anywhere from, 2.85 to 3 to 1 on something like this. If things, this is a continuation or an escalation of things over in the Middle East that this probably does well on.
All right, we'll leave it there. Mike Shorr, Prosper Trading Academy, and Ben Lichtenstein, thank you both so much.